Welcome everyone. My name is Anthony Koning and I'm CGAP's gender lead and also one of the co-authors of the technical guide on addressing norms in financial inclusion. Today's webinar is a part of the Gender Equality and Development Plus 10 Accelerate Equality initiative that explores progress that we've made and lessons learned over the past 10 years. And I would say there is a growing recognition of the important role that gendered social norms, or gender norms as we call them, play in influencing how women's access and use and benefit from financial services. There's also an acknowledgement that norms can and do change. And we would argue that by better understanding and accounting for gender norms, we can actually contribute to developing a more equitable financial system that allows both men and women to benefit from opportunities equally. Now, to provide practical tools to actually support that understanding and ability to account for gender norms, CGAP, in collaboration with Market Share Associates, developed a methodology for systematically unpacking the behavior of women as customers and users of financial services and assessing how they are shaped by gender norms. We incorporated a financial inclusion lens into existing social norms research. And between 2019 and 2022, we tested this in various contexts, including in Turkey with Syrian refugees and with female entrepreneurs in Egypt. And over the last year and a half, CGAP and Finequity facilitated a collaborative peer learning effort, the so-called CoLab, with funders and market facilitators in 6 markets to test that initially developed methodology. Now, today, we will hear from 3 of those CoLab partners: Access to Finance Rwanda, the Bill and Melinda Gates Foundation working in Bangladesh, and we hear about the experience from Malawi, where the joint program on gender transformative approaches for food security and nutrition that is implemented by the FAO, IFAD, and the World Food Programme with the European Union carried out a gender norms diagnostic as well. So I'm really honored to be joined today by 3 of those representatives. Emily Akoth, who's the Gender and Inclusion Specialist at AFR and highly experienced in developing gender responsive policies. Snigdha Ali, the Interim Senior Program Officer and Gender Advisor for WIFI, the Gates Foundation, where she manages the initiatives for advancing financial inclusion for women in Bangladesh. And Billy Molosoni, who's the Gender, Justice and Advocacy Lead for CARE International in Malawi. And the joint program that I just mentioned partnered with CARE Malawi to conduct the gender norms diagnostic. We will also hear from my colleague, Yasmin Bin Humam, who's a financial sector specialist at CGAP, who was closely involved in the original development of the CGAP MSA diagnostic guidance in Turkey. And she's been focusing on women's financial inclusion for the past 6 years. I invite you to use the chat, and I see there's already messages coming in, so please continue doing that, but leave your questions for any of the speakers that you might have. We will turn to your questions later on in the session, but we will answer and share relevant resources in the chat throughout the session. If there are questions we do not get answered throughout the session because of a lack of time, then you will be sure to find those questions and their answers together with the webinar recording on the Finequity website afterwards. So those were a few words of introduction. What we are going to do throughout this session is cover 4 things. First of all, we'll explain a little bit more about the diagnostic methodology and why the partners that you hear from adopted it. Secondly, we will be hearing from their experiences with the implementation of the diagnostic. And thirdly, we hear about the findings. And finally, what to do next with these findings. Let me start by giving you a little bit more background on the diagnostic methodology, and you will find the link to the methodology in the chat as well. The purpose of the diagnostic guidance is really to develop a deep understanding about how women's experiences in the home, in their community, and in the workplace is different from men's as a result of gender norms. And the intention we have is that incorporating that understanding in the design of interventions and solutions can actually improve the financial service and delivery for women. One thing we have to note at the beginning, while the behaviors of all the actors in the market system, so including the financial service providers, the policymakers, agent networks, etc., are all governed by norms, which is also something that we really elaborated on in the CGAP technical guide on addressing gender norms that I mentioned earlier. This diagnostic methodology that we're talking about today is specifically focused on and provides tools for understanding how gender norms affect women's behavior when accessing and using financial services. Now, the diagnostic process is broken down into 4 research phases, and you can see them summarized on the slide. The first phase is to determine the scope of the study and how the diagnostic will be carried out. And of course, it begins by identifying and defining a specific target group of underserved women. This might, for instance, be women entrepreneurs that are engaged in cross-border trading, for example, and it then determines the desired financial inclusion outcomes for that segment. For example, you might want to increase their use of digital financial services. That's the first phase. The second phase then is to explore the behaviors that result in these women being excluded or underserved by the financial sector and the gender norms that are influencing those behaviors. And you'll get a list of those. But in phase 3 then, you investigate a smaller number of gender norms in greater depth to move beyond the how and why women behave the way they do, to understand more deeply how gender norms influence their behavior and who shapes the gender norms, and what the consequences for women are when these norms are shifting. And last but not least, you analyze the data, synthesize it, and then also share it with the relevant stakeholders that you hope will be implementing those insights. Now, as you can imagine, carrying out a gender norms diagnostic with this process is rigorous, is robust, but it also requires a significant amount of time and resources as a result of that. The time frame for the research that we have undertaken to date ranged between 6 and 12 months. And of course, it all depends on the scope and the context for the study. And that also influences the budget that you might need. Just for an example, the CoLab partners that we worked with spent between $30,000 and $200,000 on these studies. The average was probably approximately $100,000 for the study. So that's a bit of background on the diagnostic guidance methodology. I'd like to turn now to the speakers that we have today and ask you the question about why your organization decided to undertake this gender norms diagnostic, and how you see the differences also between this kind of gender norms diagnostic with other forms of gender analysis or assessments that you might do. And I'd like to start with Emily first, if you can respond to that question, and then we'll go to Snigdha and to Billy. Emily, over to you.
Thank you very much. Thank you, Antonique, even for participating here, representing Access to Finance Rwanda, just sharing our experience with the diagnostic. Why we decided to undertake this diagnostic is because women are an integral part of AFR's strategy, so that we support inclusive economic growth in Rwanda. And we were interested in understanding the root causes or the key factors that create barriers for women financial inclusion and the women economic empowerment. And as such, despite the fact that Rwanda scores very pretty high on the global gender equality index, and as such, you find that there is a small gender gap in access to finance. But the reality is that women still do not benefit from the financial services the same way as men. And so we just wanted to understand what are those, why this behavior, what is really behind this behavior. And therefore, you find that this is especially true about women entrepreneurs who are credit constrained and are unable to grow their businesses. And so the data, for example, we have data from FinScope 2020, you find that women mainly depend on informal sector, such as the small and irregular incomes. And also women have lower access to assets. For example, we have 47 for women and versus the 54% for men. And also lower ability, women have low ability to use assets to cope with shock. That is like 25% female actually have low ability compared to 31% that are men. And therefore, all this points to a particular fact that there is something deeper that is creating challenges for these women. And therefore, we wanted to understand what is this, and most likely it is the gender norms. And therefore, the diagnostic was an opportunity to explore why women entrepreneurs are not using the financial services. Yeah, thank you.
Thanks very much, Emily. Really going to the root causes of these numbers that you gave. Very interesting. Snigdha, over to you. Why did you decide to embark on this gender norms diagnostic in Bangladesh?
Thank you, Angelique. I would like to begin with thanking CGAP for letting me be a part of this very important conversation. According to the latest Findex data, the gender gap in financial inclusion in Bangladesh has improved by almost 10 percentage points and declined from 29% in 2017 to 19% in 2021. Quite an impressive achievement, but it is still the highest in the region. While the numbers say how much, we need to better understand, as you also earlier mentioned, the whys and then the hows to make strategies and policies work better for women. This study methodology is unique. It brings the rigor of a quantitative and systematic approach to a topic that often seems very abstract. We know that restrictive social norms exist, and attempts to bring behavioral changes through community approach, mass media campaigns, government incentives, etc., can be helpful in addressing some of those norms, but that process is often a bit unstructured and limited to a specific outcome. The goal of this methodology is also tied to a specific outcome, broadly to increasing women's financial inclusion by identifying normative barriers. But what this diagnostic approach also does is provide data and insights about a number of identified norms that turn out to be most restrictive for the targeted segment of women. And it also identifies key influencers who were instrumental for any attempts to change these social norms and provides recommendations that are deeply contextual.
Thanks very much, Snigdha. And you highlighted some very good points about data and insights, evidence that you can actually use then, having a much more structured approach to addressing the influences, for instance, or involving them in solutions. Billy, over to you to Malawi.
Thanks, Antonique, and greetings from Malawi. We are delighted to be part of this conversation. Malawi is one of the two focus countries where the EU-funded joint program, Gender Transformative Approaches to Food Security, is being implemented. And one of the key objectives of the program is to enhance economic autonomy of women and youth through their improved financial inclusion. Now, this is against a background of low access to formal financial inclusion, especially for members of the village savings and loans, with about 45% of the adult population in Malawi aged 15 plus having at least a financial service product. But also over the couple of years, financial service providers have designed products with an aim of reaching out to women, but still more, you only find that 36% of them have at least one form of financial service product. So that was basically the background to the study. So because the joint program wanted to understand why women and youth are not accessing, we used the social norms diagnostics framework, basically to understand the behaviors. And the whole reason why they had to come to CARE is because CARE has been working on social norms for a while. We have our own approach, and we also introduced to Georgetown University SNET program. However, what we noted from the CGAP framework is that it gave us more pointers on what we can do and what we can focus on. The joint program could have opted for a typical gender analysis. And most of the gender analysis as well as gender diagnostics would focus on personal issues, but they will not go deeper into understanding what are the key drivers of the behavior. And this social norms diagnostic framework did provide us with that kind of learning. Further, when you look at the methodologies used, what we noted is that there are some specific techniques which do depersonalize the issues. One of the tools that we learned and used in the norms diagnostics is the use of the vignette, use of stories to get information from the participants. And I think that was a great learning from the team because, as I mentioned, it depersonalized the whole issue. Thank you.
Thanks, Billy. A really, really interesting point. Actual practical tools that helped you to ask the right questions and depersonalize something that's actually really hard to do research on with people, right? You can't just go to people and ask them about the norms. You have to really do that in a very careful manner. So thanks for highlighting that from Malawi. I want to go back to all of you again and ask you also about your experience in general with the implementation of the diagnostic. I'm sure you ran into challenges as well, and I'm sure that people on the webinar would really be interested to hear what kind of challenges you ran into and how you overcame them. Billy, I'll stay with you for a moment. Why don't you go first, and then I'll go to Emily and Snikda next.
Thanks, Tonique. One of the challenges for the Malawi team was basically, where do we start from? Before using the social norms diagnostic framework, we started with a relatively broad framing of our study. So we just looked at the target group. And so we started with the CARES SNAP framework, then shifted to Georgetown University's SNET framework, trying to figure out how we can best do the study. And then we were introduced to the Fini-Quite-Siga social norms diagnostics framework. When we looked at that, the starting point was basically defining the financial inclusion outcome. And that basically anchored the whole study, and it gave us more leeway to focus on which behaviors should we explore. So that was basically, I think, the key challenge and how we had solved it. But also, when you look at the social norms diagnostic study, it requires greater collaboration and partnerships. We started off with a few partners, but along the way, the study collaborated with a range of partners and stakeholders. That included financial service providers. We engaged government at different levels. Let me also mention that key to this study was engaging two public universities in Malawi, the Lilongwe University for Agriculture and Natural Resources, as well as the University of Malawi. They have departments that offer gender studies, and their engagement as part of the research team did bring in the local perspectives while also building the local capacity. Thank you.
Thanks very much, Billy. I really like the notion of building that capacity as well of this methodology that can then be applied in other research efforts as well. Emily, let's see how you fared in Rwanda, and you've only recently completed the whole diagnostic, so things are fresh in your mind, of course, as well.
Yeah, sure. It's almost similar to what Billy has said. For us, I think the most challenging part is the length of the diagnostic. It's longer than what we had anticipated. One is because of the nature, the interactive nature of the whole diagnostic. Of course, we started by identifying the target groups. And so during the kickoff, we realized that we had left the younger women. So there is a category of women that we had left out. So we had to include both younger and the older. So we expanded that age group and also from 16 to 55, just to have a cross-cutting and intersectional characteristic of the women we wanted to look at. And also we expanded again the regions. We had initially thought of looking at just the urban, but now we had to bring in rural. And the rural, because of Rwanda has neighboring countries like Uganda and Congo. So we picked those areas because of the cross-border trade. So we were looking at women entrepreneurs along the cross-border trade and how those norms, specific norms, will actually influence their behavior. And so after that, of course, we got into looking at now what will be our outcome, financial outcome be. And of course, the design workshop came in. So after the design workshop, we came up with the financial outcome, which is to increase access to, use of, and benefits from financial services for women entrepreneurs, both in urban and rural areas. And of course, after that, it takes quite a long time. And then also we decided, instead of using qualitative, we also decided to use quantitative, identify from the financial, the women entrepreneurs, just speak to the women entrepreneurs already probably being served by either microfinance or already using some form of formal or non-formal financial services. And then deep dive into now getting into the categories, who are the influencers. And that's one of the experiences that you cannot skip a stage, because one speaks to the next. You can't skip a stage. So you cannot start with, you can't deep dive when you have not identified what those outcomes are, or rather the change, the outcome objectives will be. And so that process can take longer. And one of the ways we curbed on that time, so that we don't wait for the result at the end of the day, we actually deliberately worked with the consultants to actually now keep abreast of every stage, and every milestone. For example, design workshop, we engaged different stakeholders, just like Billy has also mentioned about Malawi. We also thought that bringing the stakeholders early in the process is very important, from government, from the financial service providers, from the CSOs. So that actually provided even better relationship building, like you're starting on a journey. So by the time we're getting into want to identify where our data was going to come from, the financial service providers were we were able to easily access their data. And so you find that by engaging this quite a diverse stakeholder, there is greater insight you get from there. You walk along such, by the time now we are going to design the interventions, it's very easy for even now each category of stakeholder to actually come on board and address these issues on their own. And one of the key things is that for example, from the Rwanda's gender, the BNR, National Bank of Rwanda's gender unit, what they took an interest in this particular study to just understand that depth. Of course, if they are not being brought on board and start this conversation, I'm sure some of the findings, particularly, they could be now start conversation around that. We have the financial service providers that participated already asking, what did the women talk about? What did they say? So that they're able now to integrate the findings into their own work. So this was those were the lessons that we learned. And yeah, thank you.
Thanks so much, Emily. Can't skip a stage. I'll keep that in mind. And creating stakeholder buy-in throughout, so that you actually win time again towards the end. Really, really good. Snigdha, over to you. You also had experiences with the supply side in Bangladesh. You took a bit of a different approach, expanded your study. So maybe you can talk a little bit about that, and also about your experience as a result.
Sure. So in attempts to have a deeper understanding, I thought that expanding the scope of the research to include data on how norms shape the behaviors of the financial service providers would be useful. The guidance doesn't currently include this supply side approach, but it is important for designing interventions. So this was the first time that anyone was looking at how norms shapes the behaviors of FSPs. In other words, understanding the biases providers may have about women as clients, which is extremely tricky, because these norms or these biases may sometimes be in contradiction to the existing policies. So it is always important and helpful to get the supply side involved in the conversation, the understanding, the process, and this was an effort to bring them in formally for the first time. It was challenging to get FSPs to engage in this, as it is sometimes uncomfortable. But as Emily mentioned, that It takes long, it should take long because we cannot skip a step, and it is an iterative process. And in accordance to what Billy just mentioned about local capacity building, I would also add that it is very important to find the right local partner given the sensitive nature of gender norms. The data collectors, the research firm that is engaged in the local areas need to understand the local context and culture to be able to ask questions and get good information in the right way. Otherwise, as we all know, this is a difficult, sensitive, tricky territory to chart on. Thank you.
Very much, Snigdha, for highlighting that. And as Billy already mentioned before, there are some tools in the guidance that can help you with that. But it remains an important point to underline that it is a very sensitive area of research, and we should be very, very careful undertaking the research and also drawing the conclusions from that. Let's move to your findings. And Yasmin, I'll come and bring you in here as well. But what I'd like to ask first to Emily and then let me see that I get my order right. I'll start with Emily, then Billy, Yasmin, and Snigdha. Sorry, Snigdha and Yasmin. Maybe speak to the norms that were identified, Emily, in Rwanda. On this slide, we can see the target group that you focused on, which you already just mentioned, and the financial inclusion outcome. But which of those norms that, maybe you can just pick one of them and speak a little bit to it. And importantly, also expand on what you think you actually are getting out of this diagnostic finding that will then help you further inform your interventions. Emily, over to you.
Thank you. Yeah, of course, from just speaking from where I had left, we had 4 norms after the analysis of the quantitative. So one of the 4 norms, I think I'll talk about women should not prioritize family over business. Of course, there were other norms, but we had a workshop that we prioritized and looked at. The priority was based on the severity in terms of the sanctions and the high impact when that norm is relaxed, and also the opportunity that what is already there, that some of these norms are being relaxed. And so one of the findings out of those prioritization, we looked at women should prioritize family over business. I think that's what got me interested, just to share that age and marital status impact severity of this norm. So that was very clear, because remember I talked about, we looked at women from 16 to 55. And of course, it was very hard also to find young women below 30 who are single, for example, or even the young married women participating in as entrepreneurs. It was very hard to mobilize such women. And when we looked at some of the reasons that were coming out is because some of these sanctions, young women are expected to actually uphold this norm. They are expected to give priority to the family instead of taking part in the business. And therefore, maybe that could have affected that younger women will not be able to start their business and access those financial services. The other thing is that women are expected to actually turn to family for financial services. Of course, that was empirically, there was a division among the respondents, because we find that there is a lot of work that has been done in Rwanda that is actually enhancing that people should seek financial services from the existing formal organization or institutions. And therefore, you find that was a division. However, again, age and marital status, and also the location, because we find the urban women, urban and older women are not actually, they are already being given the confidence to actually either seek financial services from the formal banks or the MFI that are existing compared to the younger women. And if you look at, we did like a correlation between the first norm and this one, you find that if the younger women are supposed to prioritize their family businesses, they're supposed to prioritize their families over businesses, and therefore they'll not be able to even start a business because the banks will not even have confidence in them, and therefore that is one of the things that were coming out. And also sanctions are less severe for women in urban and compared to the rural ones. And you find that it is very acceptable for women entrepreneurs to borrow from FSPs just for growing their already established businesses. And yet, how will they grow their businesses when they are not allowed to borrow to start their businesses? So that was one of the findings we're finding, and just asking ourselves that. Something surprising is that married women are more aware of financial products and services compared to the unmarried. And this was very surprising, and we are just having a speculation whether is it that the FSPs are having products for couples. You look at the Rwandan law, the family law actually expect women joint discussions or decisions on financial matters, joint ownership of property. And so probably the married ones have an upper hand of having access to information or information on financial products. And therefore we expect that younger women to be more who are tech savvy. They're supposed to be tech savvy and have more information, yet they are not. So one of the hypotheses is that there might be fewer sanctions on married women getting access to the information, or as compared to the younger women. And so understanding this can actually help in terms of designing financial education programs. So whom do you target more? So so that was coming out clearly, and the surprises. Yeah.
Thanks very much, Emily. And you really highlighted the contextualization and the nuances that you learned from the gender norms diagnostic that can inform your next interventions. Very good. Billy, I'll go over to you, and we see how the norms in Rwanda played out.
Yeah, thanks. So in Malawi, we had 5 norms. 4 norms were focusing on women, and 1 norm was focusing on the youth. And I will pick out 2 norms. One is married women should seek approval from spouses on all financial related decisions. And the other one being women should use their money for household expenditures and not saving. What we found is that the 2 norms are strongly motivated by gender ideologies that are related to meta norms. And there were basically 2 meta norms that we found. One is basically around the man or the husband being the head of the house. And that ultimately means that all decisions, including the financial decisions, should be made by the husband. During the study, one of the participants shared with us a popular saying, translated as "a passenger on a bike does not ring the bell," which basically means that women, due to their inferior position in the family, cannot make decisions. What this taught us is that if we are to shift the meta norms, we have to go beyond the traditional supply side financial inclusion interventions. So we need to focus beyond the supply side issues. But also the other thing that we noted is that the 2 norms, especially norm number 1, is very strong. It's pervasive as such. A majority of the men respondents, married women in selected VSLAs, or women in general, approved the norm, regardless of the marriage system, regardless of the marriage residence. Because another thing that we found in our study is that beyond the marriage system, the marriage residence also matters when it comes to how strong the norms are. So, for instance, in Malawi, we have 2 systems, patrilineal and matrilineal. In matrilineal societies, the assumption is that women have more power, but because the assumption is that the husband will be staying in the wife's residence. But what we found is that even in the matrilineal societies, you have what is called auxililocal kind of. There are basically 2 types of marriage residence, virilocal and auxililocal. One is where the wife stays in the husband's residence, even if in terms of child lineage, the children would belong to the mother. But in terms of marriage residence, the wife stays in the husband's residence. That's what we noted, is that even if it's in matrimonial, we noted that the husband has more power around most of those decisions. Another thing that we noted and very important is that the norms are not rigid. They can relax in certain circumstances. So we talked to women in polygamous relationships, and what we heard is that in the second wife has more freedom to make decisions because the attention goes to the first wife. So that was one thing that we learned, basically pointing to us that within the context we are operating, there are opportunities that we can influence certain behaviors. And lastly, even though the norms were generally approved by all, but what we noted is that there are some women that we called positive deviants. There are very few, but they have opened accounts of their own, either using relatives' names or using other forms that the husband may not discover. Because once it's discovered, they would face backlash or they would face certain sanctions. And basically, one thing that we learned from a programming perspective is that there are role models out there who could be entry points for programming around women and youth access to formal financial services. Thank you.
Thanks very much, Billy. And you really highlighted a couple of important points, I think, in terms of how these findings are leading you to think more systemically about an approach. You also highlighted the differences in strength and prevalence of certain norms. Certain norms might be relaxing and those present opportunities, as well as the importance of positive deviance that you were able to identify through the gender norms diagnostic. Excellent. Snigdha, let's move over to Bangladesh and see what norm you would like to highlight from the results of your diagnostic.
So, as we have seen, norms can be sticky and yet flexible. And what we just heard from Rwanda and Malawi, and then we will go into Bangladesh, that markets from very different contexts may have many similar overlapping norms. And in resource-constrained countries like Bangladesh, what I have seen is that norms alter when the situation requires, i.e. when the economic incentives or disincentives come into play. For example, if we just pick one particular norm, that young women should not manage finances independently, could have a multidimensional impact if we just be able to change that, so to speak. In the preliminary deep dive from the demand side, young female participants ranging from non-working to working, including entrepreneurs and single to married, say that they believe that women should not manage their accounts independently. They should seek guidance from men for operating accounts and financial decision-making, and are less aware and experienced than men. And from the supply side, the financial service providers said, although they believe that female loaners are more reliable and the repayment rates are better, in most cases, female loanees do not actually control that credit. We selected a region called Sylhet with more stringent social norms for women and presumably women having less access to financial services. But what this study found is that young women's use of digital financial services was higher than expected. The reason being, many of those women's husbands have migrated abroad and send remittances regularly back to their wives, who are then expected to manage that money and make decisions about it. This may have a longer-term impact in terms of taking the situational agency of women to make a case for changing the norm that women should not manage their accounts, and can also have spillover effects on other areas of decision-making in the household. This may not be relevant here, but I have seen from other studies that when women manage the household in absence of their husbands, their mobility, decision-making power, even their social standing in the community increases. So social norms are overlapping, sticky, yet changeable.
End on a positive note. Thanks very much, Nigda. Really good. And Nahid and Caroline, we've seen the question that you've put in the chat. We'll get to that in a moment, but I'll first want to transfer to Yasmin. Yasmin, you have been at the very beginning of the development of this diagnostic guidance, and I think it will be helpful to hear from you a little bit about your experience when you did this in Turkey with Syrian refugees, and particularly how you managed to translate the findings into usable insights, if I can call it that. Over to you.
Sure, thanks. And since this is the first time I'm speaking up, I'll provide a little bit of context for my role. So back in 2017, Mayada El-Zoghbi, who was at that time with CGAP, published a brief on sort of calling the financial inclusion sector to do more work on social norms and to consider social norms in our programming. And we followed that up then with, we had to put our money where our mouth was. So we started doing, this process of, well, what does that actually mean? We've seen it done in health, we've seen it done in education. What does it mean to do it in the financial inclusion sector? And so we began with a group of Syrian women entrepreneurs in Turkey, in southeastern Turkey, and developed sort of the forerunners of this methodology, which Snigdha and Emily and Billy have been applying. And it was quite the process to go from, defining the change objectives to accurately pinpointing the behaviors that needed to change, and to then, determining which norms exactly were relevant to those behaviors, and then taking apart those norms. And similar to what the other speakers have said, we found that there were always exceptions and nuances, to the norms that we were finding. And so how we dealt with this was we created personas of women so that we could see, who's more bound by norms, who's more likely to be sanctioned, who has opportunity to be a leader in, pushing the boundaries of the norms. And so what I've put into the chat here, you can see, is a sampling of the personas that we provided. And what we found was actually that this resonated with financial service providers and gave them an entry point to take action based on the norms. So, a more traditional woman who would like to keep a small business based out of her household, might benefit from something like a simple savings account and some financial literacy training from her financial service provider. Contrast this with a young divorcee who is the prime breadwinner for her family, and is less bound by, decisions around household, sort of less bound by norms around household decision making. She might benefit from, bundled service of insurance, credit, and also mentorship by a more established entrepreneur, for example. So these personas provided entry points for financial service providers. And actually, I remember speaking with a representative from TEB Bank in Turkey and going through these personas, and she looked at one and she started laughing. And she said, "Oh my God, this is my mother right here, this woman who you just described to me," she and other financial service providers said that where this would be most beneficial to them is to sensitize their frontline, client relationship managers, to kind of open their eyes to this different universe of possibilities, and to encourage them not to paint women with a broad brush, and not to assume that all the norms apply equally to all women, but to be creative in their approaches to these clients. So I'll leave it there at that, and I'll continue to share some more links in the chat.
Thanks so much, Yasmin. And if there are any questions on this approach, I think you can also put the link into the report that we have on the Turkey diagnostic that was published a while back. Time for questions now. We have a number of questions in the chat, and I'm just going to distribute a few between our panelists in order to guard the time. There's a question, Emily, for you about that was posed early on in the session by Caroline. Do you see any difference when it comes to digital financial inclusion of women entrepreneurs? So hold on to that question for you. Snigdha, maybe you can address the question that was posed by, let me just go back to Nahid, who's thinking about the question of how easy it is to get for women to get loans from microfinance institutions, especially if they don't have the requested documents. I don't think we can cover all 3 countries, but maybe you can answer this question for Bangladesh. What's the situation in Bangladesh, and maybe how norms play a role there? And then Billy, there is a question that I see came to me, not to everyone, but it's from Oluyomi, who is asking, is first of all thanking for the stimulating conversations, and then saying, I'm interested to learn how women's participation in trust-based informal savings groups may exclude them from more formal and or digital financial services. And knowing that CARE is very much involved with these informal ROSCAs and savings groups, maybe this is something that you can address. So let's take these first 3 questions first, and then we'll go to a next round of questions. And please do add your questions in the chat. Emily, first over to you.
Thank you very much. About the difference, there is no very big difference, I think, because of course the digital financial inclusion for women is even lower, given that especially for the rural, there is the internet connectivity that is required with the digital, and so that is one of the key things. But if you look at the fin scope, again, the difference is not so much, but it still reflects that men are dominating the same. And another thing is the ownership of asset. Funds are considered assets, and so if the norms are actually influencing the control and ownership of assets, then it also influences the same as for the fund. So you find that sometimes they might not even have. So yes, that is still the same. There is no big difference. Yeah. Of course, there is a lot of there's a lot of work that is being done around the digital literacy and digital financial inclusion around Rwanda. Yes.
Thanks, Emily. And Snigdha, maybe you can refer to the question around the guarantees and the documents in Bangladesh.
Thanks, Antonique. So Bangladesh has quite a long history of lending to women through these microfinance institutions. What we have seen is that because these programs began with targeting women as the borrowers, it has been relatively easy for women to get credit, to get loans from these institutions. And in place of maybe guaranteed documents or collateral, what worked is a community-based approach. So there will be a group of women who will be formed, and they will collectively take the loan. This is how it started with Grameen Bank. And they are all kind of responsible for each other's payments. So a social peer pressure for repayment, and it worked well in terms of repayment rates and etc. It has evolved a bit. There are other MFIs who may not need a group to form, but at the same time, as we have heard even from formal financial institutions, that repayment rate for women is higher. They're seen as more trustworthy clientele group even than men. So for rural women who do not have any documentation for assets, collateral, or credit history, it is not so prohibitive or restrictive to get loans from MFIs.
Thanks so much, Snigdha. And Billy, maybe you can address the question around the ROSCAs, the savings groups. I don't know if you want me to repeat the question because it was not in the chat box. Did you get the question when I mentioned it earlier, Billy?
Hi, Angelique. Yeah, I got the question around how do women participation in informal financial inclusion groups influence their participation in the formal financial inclusion. I think that's how I got the question. I guess I got it right.
Yeah, you did. Go ahead.
Okay, fine. So in the context, and I'll speak in the context of Malawi. In Malawi, we have over 1.5 million village savings and loans groups. That's the informal groups, against a population of about 19 million, with 80 to 90% of them being female. And because they have joined these groups, mostly they are oriented to issues around financial literacy. And one of the key things that we're also focusing on is linking them to the formal financial service providers. And as earlier on mentioned, a number of service providers have developed products that are specifically targeting the VSLs. What we have seen is that there are two sides to the issue. Some of the women are accessing the formal financial services as a result of them joining the informal groups, where they're exposed to some learning, they're exposed to some financial literacy related issues. But still more, some are not joining. And mostly those in the married relationships, because of the social norms that I alluded earlier on. So I think that's how I can respond to the question. Is it influencing? To some extent, yes. To some extent, no. Depending on other factors, which include mostly the social norms. Over.
Great, thanks, Billy. Keep coming with the questions, but I'll try to pick out some of them. Julie actually wanted to know or learn more about how programs end up putting their diagnostics to use. And she also mentioned that she's a bit concerned if we all end up some really high level personas. And Yasmin, maybe you can comment on this, because and actually in the other programs, you heard the diagnostic findings, but each of the participants in this panel have actually not gotten to the stage of designing the programs yet. That's our next step, and we'll talk about that. But in Turkey, this was already done a bit longer ago. And this actually also goes to Corinne's question, which I see Nisha has also already responded to. But Yasmin, maybe you can briefly comment on that. And then I would like the other speakers to prepare maybe for a response to Yakuta's question around bringing the diverse stakeholders into the research. So if Emily, Snigdha and Billy, you can take a quick look at that. Maybe you can't all answer them, but maybe have a look at that question. Yasmin, do you want to comment briefly on Julie linking to Corinne's point as well, please? Thank you.
Sure. I'll touch on Julie's point about Julie's 2 points. Sort of, we don't just want to end up with some high level, personas that kind of oversimplify things. Definitely not. And the idea is that the providers themselves will be the ones who. The financial service providers will be the ones who go through the exercise of creating the personas. And through that exercise, of course, we'll become more familiar with the findings of the diagnostics, rather than reading, just, sort of reading them in the report, actually working with them. And then, they can create as many personas, or as few but narrow personas, as would be useful for their programming. So that's very adaptable, but it's an area that should definitely be explored further. On how I'll touch on how CGAP is sort of actioning these findings. We've actually decided we want to take the work that we've done on social norms and bring it more into the regulatory space. We've worked a lot with, on the ground development providers and financial service providers, but we really think that there's scope to take this work into the regulatory space and open people's eyes to what I call the myth of gender neutral regulation. We assume that just because regulation doesn't reference women or men and that it applies equally to them, that it will have equal impact, but that's not the case, because women and men have different realities on the ground. The most common example in this area is know your customer requirements. If women don't have access to those forms of identifications, it's going to have a discriminatory impact. We see the same thing with, collateral requirements and women owning less collateral. AFI has recommendations around regulators being more intentional about how they regulate, cash in, cash out access points to ensure that they are located in places that are accessible to women and safe for women. So there are many examples that exist. Regulators are a bit reticent to wade into the territory of social norms, but I think with this strong foundation of a diagnostic process, and findings on how everyone else is doing their part in their space, we'll be able to bring the regulators along as well.
Thanks very much, Jasmine. And with that, I want to give a final word to Emily, Billy, and Snigdha as well. And maybe the last few questions that have come into the chat are all about what next and how do you integrate these findings into programs. So if you could just share a bit of your thoughts on that, and we are running out of time. So a quick minute for each one of you. Emily, start with you.
Yeah, of course. FR is focused on operationalizing the findings in our work, given the role as a market facilitator. So we are going to work with all the regulators, the financial service providers, and even those CSOs that are reaching out to the demand side. So we are exploring on possibilities of developing specific projects and mobilizing resources to address the norms that have been identified so that we can enhance women financial inclusion and women economic empowerment. And it's very important that we don't just work, not just with women, but to work with other system actors. Yeah.
Thanks very much, Emily.
It's still work in progress, yeah.
Yeah. And you've only just completed it, of course. So lot to bit further discuss. Billy, over to you. Sorry, yes, Emily.
I may just add
yes.
that because we were already at abreast with every stages, every finding we're getting, we're already incorporating in some of our interventions. And so we mainstreamed, we made sure that we focused on addressing some of these social norms, especially when you are mainstreaming women into the programming. So we were putting into consideration some of the things that we were already finding. Yeah.
That's a really good point, Emily, and it responds to another question that I saw in terms of, how do you learn as you go along, because you can't wait a full year for the final results. Very good. Billy,
yes.
Your next steps.
So in Malawi, we are basically looking at institutionalizing the social norms diagnostic framework. We worked with the two public universities during the study, and we are continuing working with them around integrating the practices, some of the gender norms diagnostic practices as part of gender programs offered by the universities. But also we are working with them around developing standalone modules for gender studies at different levels. We are also looking at expanding the space for peer-to-peer learning. So we are coming from a training where we had about 30 staff and partners from WFP, IFAD, and FAO. And we said, so what next for us? Can we create a space where we can share learning around the social norms diagnostics? Thank you.
Excellent. Thanks, Billy. And Yasmin, you already mentioned the next steps for CGAP. So I'll just go straight to Snigdha before we conclude. Snigdha?
So I would like to take the learnings from this study to the other programs at the foundation first, which goes beyond just financial inclusion, because this is a tool. This is a conceptual tool that can be applied elsewhere as well. But for the supply side or the country context, the market, I would like to explore the nexus of gender norms and advocacy as a strategy to support norms shift and make it easier for women to be included. The reason is that the central bank has a number of gender inclusive policies, like there are collateral fee, quite high ceiling loans for female entrepreneurs. And as Yasmin mentioned, there are KICO agents where women can access. But again, it comes through the norms that women do not know about the loans they are entitled to. Even when they know, they do not feel comfortable to go to the banks to apply for the loans. They have restricted mobility in some areas for which they cannot go to the agents. So We have policies, and now we will have the recommendations of changing the norms. And I would like to see how they can be bridged to move forward. Thank you.
Thanks very much, Nigda. All really very concrete ideas in terms of next steps. Our next step is that we're almost closing the session. So I have one poll that should pop up on your screen as we speak. And I really would like to just ask you, how likely are you to apply a gender norms diagnostic in your work? And just answer that question, please. In the meantime, those of you that have already answered, I quickly want to ask you, if you have any further questions or you feel you need anything more to learn about this diagnostic, continue to put information in the chat. We also would like to know what it is that you need to help move this agenda forward. With that, it just rests me at the hour to thank everyone. Oh, sorry, one last point is there are a lot of the links in the chat, including one very interesting from Women's World Banking, from Jill. All of that, including the recording and the presentation, will be on the Finequity website soon after this. So I invite you to go back there. Also, those questions we have not been able to answer will be answered there. I'd just like to then conclude by giving a big thanks to my fellow panelists, Emily, Snigdha, Billy, and Yasmin. And in the background, Nisha, who is the brilliant facilitator of our collab and made this all work. So thank you all for participating, your questions, and hope we'll see each other next time. Thank you very much.